Without a doubt, Bitcoin. Without a doubt. Yeah, I think because gold's at 4,000, I don't think gold will go to 8,000 in the next 12 months. Not even close. I mean, I think gold will go to 5 or 6, possibly. But I feel like everything I see in pattern recognition, looking at the 2018 to 2020 example, I'm pretty highly confident that Bitcoin will close to double from here in the next 12 months. I mean, maybe I'm a little off. Maybe it's 70%, but I think we're going to see, 150 to 180 to potentially quite more. But let's just be conservative, say that level, and that will make the percentage increase in Bitcoin significantly more than the percentage increase in gold. If you'd asked silver, I might have said, it's going to be a close race.
Fiat money systems are running into a wall of fiscal math, and the result is inevitable: massive money printing. Bitcoin has been reflecting this tension in real time. It dropped more than 16% this November, hitting 80,553 on November 21st, its lowest level since April, as heavy sell-offs and short-term holder capitulation erased $1 trillion in market value. Now the price has stabilized above 90,000, breaking through resistance on growing hopes of a Fed rate cut. With liquidity starting to return, analysts are already forecasting a move back toward 100,000. In a recent interview, Lepard weighed gold against Bitcoin for the next 12 months. He picks Bitcoin hands down, noting that gold at 4,000 won't double to 8,000 anytime soon, maybe reaching 5,000 or 6,000. Bitcoin, he says, draws from 2018 to 2020 patterns where it roughly doubled, and he feels confident it will climb to 150,000 to 180,000 or more from here, far outpacing gold's gains, though silver could make it close. Lepard explains gold often leads on debasement signals as central banks buy first, with Bitcoin lagging then surging via ETFs that eclipse halving rewards. He sees Bitcoin breaking 120,000 fast to 140,000 to 150,000, possibly spiking to 200,000 to 300,000 before a mild correction, backed by institutions holding above 100,000. Let's bring you more clips for further insights into Lepard's interview. Please like this video, subscribe to the channel, and turn on post notifications for more content. Thanks for tuning in. Enjoy the rest of the video.
The title of the speech is Why the Big Print is Imminent, because I really do think we're getting to the end of the road in terms of fiat currency being a viable, store of value. And of course, that's what I wrote my book about.
Yeah,
and
we gotta show the book here. So
it's and I kind of go through chapter and verse, the charts, the data points, etc. I mean, we just see everything leading up to it, and to be frank, the markets really reflect it too, Mike. I mean, as down as a lot of Bitcoiners feel like, oh, you were only at 103 or wherever the heck we are right now. We were at 126, a month ago, which is a new record high. And, and it's the companion sound money, the old fashioned sound money gold was at record highs a month ago as well. It was at 4,400, which, is really quite substantial. I mean, I remember gold at 300, 800, 1,000, 2,000. I mean, 4,400 on gold is a big deal. In my view, it's going to 5,000 plus. And so the markets are waking up to what I described in the book. And, it's, to my way of seeing it, it's pretty clear sailing ahead. I mean, these numbers are going much larger because, they've labeled this the monetary debasement trade. JP Morgan just put that label on it. And I find that interesting because it's not a trade. A trade implies that you buy something, it kind of works, and you get out of it. It's actually the monetary debasement trend, and it's going on for years. So I want to make that distinction right up front that, I mean, I like I can't recall who said it. I'm stealing it, but somebody said, Bitcoin and gold have no top because fiat has no bottom. They're going to continue to print money.
Yeah, there's no point where you're going to want to get back into fiat.
Well, that's the thing. And I've made a lot of money in some of my gold stocks and gold and some of the Bitcoin and so forth. And I think to myself, gosh, I got a lot of money in this. And I've made a lot of money. Maybe I should take some of it. I'm like, well, what am I going to buy?
That's the thing. Where are you going to put it?
Where am I going to put it? Cash? No, that's melting. All these assets are very volatile. So, but yes, I ran a gold fund, and I still believe in gold. I mean, one of the things I'm very strong about, and I've said this many, many times, is just I hate it when gold people shit on Bitcoin. I hate it when Bitcoiners shit on gold, because they both are sound money. They both are constrained in their ability to be printed. And one is geologically, it's only so much gold. And the other is mathematically. And, they both are helping kill the fiat world, and fiat's the enemy, right? Fiat is what has made our world so bad and what's caused all the pain that we're experiencing. And so I want to kill the fiat beast. And, if people want to express it through gold, great. It's less volatile. It's not going to go up as much. Bitcoin's going to crush it performance-wise. Bitcoin's ultimately going to demonetize it. But one thing I do think some Bitcoiners have done is they've said, well, that's going to happen overnight.
Yeah.
And we all know that in human behavior.
Centuries.
Well, I don't know about centuries. No.
At least decades.
Years, probably a decade or two. Yeah. So it's going to take some time.
Yeah. So have you been surprised at how much gold has run in this past year while Bitcoin has kind of stagnated?
I have a little bit, to be honest with you. I mean, it's kind of, to me, it's a very good signal. It's the world waking up to the debasement. Okay. And it brought in my presentation, and maybe you can link it in the show notes to this pod. It brought up my thoughts of a chart which I ran of the Bitcoin price and the gold price from 2017 to present. I overlay the two, and the scales are very different because in that time frame, Bitcoin's gone up 800% and gold's gone up 300% or something. But what you can see is interesting is at several points in that chart, gold moved first, Bitcoin followed. There was a lag. And gold's so widely distributed, it's being bought by central banks. Everyone knows it's old-fashioned sound money. And so when the debasement is being smelled, the big money goes after gold. The big money is still not in Bitcoin yet. It's coming. We see evidence of it, the ETFs, Larry Fink, etc. But it's still not, we still just don't have a big money bid for Bitcoin yet, but it's coming. And so I really like the case that happened in 18 and 19 and 2018, 19. So 2019, there was the pivot, the Powell pivot, and that was when the repo spike occurred and interest rates blew out. And so what happened is it became very clear that they couldn't keep reducing the size of the balance sheet, so they pivoted and started growing QE again. And this was before COVID. This is late 2019. Yeah. And gold took off, okay? And then COVID came, and gold took off even more. And throughout that entire time period, Bitcoin was kind of stuck between $6,000 and $10,000. And it's just, flatline. Gold's going up, gold stocks are going up, all that stuff. And I was in both at the time. And I'm kind of like, gosh, this is weird. Gold's really working, Bitcoin's not. Then one day, Bitcoin woke up, and it was later in 2020, and it went from 10 to 60, right? It went up 600% in a very short period of time. And I kind of feel like, okay, I'm as an investor, one of the things I do a lot of is what I call pattern recognition, kind of what happened in the past, it might happen in the future. And so I kind of have a sense, my gut tells me that's going to happen here. Gold's running, Bitcoin's kind of been flattish, not terribly flat, but flattish. And, at some point it's going to wake up and rip faces off. I really do believe that.
So based on that, do you think that the 4-year cycle is kind of dead at this point? I kind of
do. I'm not sure it's entirely dead, but yes, I kind of do. I mean, I think the cycle got started based on the size of the block rewards, and now the block reward is awfully small compared to the total outstanding. Yeah. So changing the block reward probably doesn't matter as much as what the ETF buying is, as an example. ETFs are buying much more than the block reward. So I kind of do think the 4-year cycle is fading. I think there will still be, Mike, I think there'll still be a cycle in Bitcoin. I mean, it's just the classic fear and greed cycle, right? And we just saw it a little bit in the treasury companies. Everyone got all excited, and then greed. Oh, now fear. And
that was a very accelerated cycle.
That was a very accelerated cycle. Yeah, and I think we're going to see that again. So my model, and this is just, I'll be wrong, okay, but I'll just give you my best guess. My model is that we're going to break out from this 120 some odd area, and we're going to go to 140, 150 very quickly, and then it's really going to get a little nuttier, and we might squirt up to 150, 200, 250, maybe even 3. I don't think we make Samson's number of 1 million, but I could easily see us, and at that point in time, we'll be a couple standard deviations or 1.5 standard deviations away from the power law, which I use as a model for modeling the price. And I think when that occurs, when that deviation occurs, then we might get a correction, and people get over their skis. Everyone will be excited. People will be using leverage, all the things that, we know get people in trouble. And, it'll go from 300 back to 140, and that'll feel terrible for the people who bought it at 300. And for those of us who've been around this for a while, we go, oh yeah, no, that's normal. The prior corrections have been 70%. I don't think we're going to see a 70% correction again. I think we're too far into its adoption There are too many institutions on the bid side. You know, I mean, look at all this reported OG selling. I mean, billions and billions of dollars, and it's held steady as a rock over 100. So I think there's and by the way, that is about the power law level of where it should be right now. So yeah, my view is we're just continuing. I mean, it's funny because Bitcoiners are very impatient. Even though we have long time preferences, we remember the past glory days and we want it to happen overnight, and look, I mean, my view is focus on the power law. If this thing goes up, 35 to 39% a year, I mean, show me another investment anywhere in the world that's, has the probability of doing that. There aren't very many. There are a few, but not many.
Fiat currency faces an end as a reliable store of value amid relentless money printing. Markets signal this shift with Bitcoin reaching a record 126,000 a month ago, before dipping to around 80,553, and gold climbing to 4,400 well above past levels, like 300 or 800. Both assets reflect a monetary debasement trend that JP Morgan labels a trade, but truly spans years since fiat lacks a floor, while they have none. Gold draws supply from geology and Bitcoin from math, making them scarce foes to endless fiat that breeds global woes. Central banks favor gold's familiarity first, as seen in charts since 2017, where it rises before Bitcoin lags, then surges. For instance, the 2019 repo crisis, when gold gained as Bitcoin held at 6,000 to 10,000, then jumped 600% to 60,000. Bitcoin ETFs from players like Larry Fink hint at big money inflows, dimming the 4-year halving cycle as purchases eclipse rewards. Bitcoin should break 120,000 soon to 140,000 or 150,000, possibly spiking to 200,000 through 300,000, before correcting to 140,000, milder than past 70% drops, thanks to institutions holding it over 100,000. Power law paths suggest 35 to 40% yearly growth few investments match. Let's go back to the interview.
The book says, I think we know, most Bitcoiners know, they are going to have to print the money mathematically because of Lynn's point that nothing stops this fiscal train wreck. However, what we don't know is how they're going to do it, how normal they're going to make it seem, if there's going to be an emergency. And by the way, I mean, I should warn everybody, if there is an emergency, because I remember March 2020, like it was yesterday, and I remember 2008 like it was yesterday, Bitcoin's going down.
Yeah.
I mean, if we have a big...
You sell what you can.
Yeah, exactly. If we have a big credit event, okay, like something breaks and, some bank's in trouble and, you'll know it. I mean, in fact, we almost kind of had one, on Liberation Day, right? When Trump said we're going to put a 100% tariff on all, on China and all. I mean, market was down 20%. A 10-year went up, shot up. I mean, we were on the cusp.
Yeah.
And he quickly turned around and said, oh, no, I was only kidding. We'll have a 90-day. We'll wait for 90 days. But I mean, something like that, something really serious and large breaking that seems like contagion would lead to a correlation of one where, Bitcoin's down, gold's down, stock market's down, bond market's down, rates are up. I mean, all of it. It would just be briefly rates would go down and then they would go up because everyone would know the print's coming. And then we'd have another, big print, right? I mean, we've had two. 2000 was one, or 2008 was one, 2020 was one. And we know humans learn through experience. We've seen this playbook. We know what they do. Yeah. We know they are not going to let our economy fail. We know that inflation, pick one, economic collapse or higher inflation. They're always going to pick higher inflation because economic collapse is just untenable. And so, I believe the next print could take the Fed balance sheet from its current level in the mid-high sixes to 20, and I mean, if that happens, gold 10,000, Bitcoin 1 million, possibly. Yeah. I mean, it's I'm not saying it's for sure, but it's possible, right? To your question, there are really only three ways out. One is you let it all collapse. You have a debt default, and it kind of looks like 1929. You have massive depression, social unrest, all asset values collapse. Everyone loses a lot of wealth. And, then probably there's some kind of a reset, which is what they did with gold back then. So my view is that politically, they just won't let that happen. They'll choose hyperinflation. Sadly, they'll choose inflation before they choose that. the middle way, the best and the fairest way, and the positive way, where, look, in this transition, when rules change, people who are on the long side of the rules get hurt. So there's no way avoiding that. But what I care about is I want my kids and grandkids to live in a good world. So the rules have got to change. The middle way is a monetary reset. I mean, Trump should have, in the early days of his presidency, he should have come out and said, hey, look, we've really made a mistake here, folks. We believe this Keynesian model. We built up way too much debt. We've emphasized growth over efficiency. We've trusted the Federal Reserve, and they've made a mess of this whole damn thing. We've got to return to sound money, and here's my plan for how we're going to do it. And it would have involved gold or Bitcoin or some other form of sound money. It would have involved writing down the debt and saying to the debtors, I'm sorry, you're getting 50 cents on the dollar or less on a real basis. But we will, and the pain will be felt across society, but it'll be relatively evenly distributed. Well, except for the people who hold the debt. And on the other side of it, at least we'll be back on a sound money standard. That's the responsible way to do it. I actually have a chapter in the book where I talk about that, and I recommend that, and I explain, I wrote the speech that I would have given if I were president. But, to be quite frank with you, Mike, I think the odds of that happening aren't really high yet. Yeah. They're just, it takes a lot, it would take enormous political courage, and it might even backfire, somewhere along the line. They might say you can't do it, although, Roosevelt and Lincoln and FDR and others have, I already said Roosevelt, others have reset the monetary system. Nixon have reset the monetary system. So there's precedent for it being in the executive branch. But third way, and I'll just give you kind of my model, because I'm sure people want to know this, and I'm going to give this model in my speech. The third way is kind of how I see this unfolding, okay? The Fed is going to print more money. We know that. We're either going to have a big print or we're going to have a medium print sometime in the next couple of years because of the math. Inflation is going to go up a lot. 9 sounded high, and we brought it back down to 3. Where do we get back to 1% interest rates and growing the Fed balance sheet and yield curve control? And, there'll be a wave of home refinancings because we'll get, the mortgage rates down. Mm-hmm. That's all creating money, right? And so inflation will go up a lot in the next few years. Okay.
I am curious, since you are involved in the gold and Bitcoin space, which do you think is going to be the better performer in the next 12 months?
Oh, without a doubt, Bitcoin. Without a doubt. Yeah. I think because gold's at 4,000, I don't think gold will go to 8,000 in the next 12 months. Not even close. I mean, I think gold will go to 5 or 6, possibly. But I feel like everything I see in pattern recognition, looking at the 2018 to 2020 example, I'm pretty highly confident that Bitcoin will close to double from here in the next 12 months. I mean, maybe I'm a little off. Maybe it's 70%, but I think we're going to see, 150 to 180 to potentially quite more. But let's just be conservative, say that level, and that will make the percentage increase in Bitcoin significantly more than the percentage increase in gold. If you'd asked silver, I might have said, it's going to be a close race. Silver is actually a very interesting story. 50 was the all-time top, and we broke through it. We're at 52 right now. And if you credibly look at the silver and analyze it, we could go to $75 to $100 silver. Well, it's the junior monetary metal. It's more volatile than gold, but it's been, it's largely been demonetized.
Yeah.
But it has a role to play, and it's absolutely essential, and it's getting used in a lot of more applications. Yeah. So
no, and I agree. It'll probably catch up with gold.
I think it will. Yeah. I think it will. Yeah.
Lawrence Lepard points out that massive money printing looms due to unavoidable fiscal math, though the trigger remains unclear, whether gradual or crisis-driven. He recalls events like March 2020 and 2008, warning that Bitcoin would plunge in any big credit crunch, as everything from stocks to gold correlates fully during panic, with rates spiking briefly before the inevitable print. Officials always opt for inflation over collapse, as seen in past rescues, and he predicts the next one could balloon the Fed balance sheet from mid-6 trillion to 20 trillion, potentially sending gold to 10,000 and Bitcoin to 1 million. Larry outlines 3 paths forward. The first lets debt default spark a 1929-style depression with unrest and asset wipeouts, but politics rules it out. The second, a fair monetary reset, would admit Keynesian errors, return to sound money like gold or Bitcoin, and haircut debts evenly, sharing pain society-wide for a stable future. He doubts its odds given the courage needed, despite precedents from leaders like Roosevelt and Nixon. The third way sees steady printing ahead, with inflation climbing to double digits via low rates, balance sheet growth, and refinancings. Lawrence Lepard notes silver breaking its 50 all-time high to 52 now, eyeing 75 to 100 soon, as the volatile junior metal gains from industrial uses, despite past demonetization. As we conclude, what do you believe will be the better investment over the next year? The steady resilience of gold or the high growth potential of Bitcoin? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.